Good evening and Happy New Year 2014. I'm Giuseppe Basile, I'm the analyst and trader you can find at the website fibstalker.com. I also post regularly on Twitter using the @fibstalker nickname. Happy New Year again. I'm glad we can start this new year, and it's going to be a very exciting year, and I'll have a lot of news for you. So if you enjoy what I'm doing, please keep following. And this video is going to be distributed on my to my subscribers, as well as being published on the blog and tweeted on Twitter. So in this brief video, I'm going to review for you two markets: the euro dollar forex and the SP500. Although you see here the daily chart of the SP500 E-mini, I want to start with the euro dollar forex, and I also want to remind you that this video is going to be very brief, but tomorrow morning I'll be at the Dale Pinkert's fxstreet.com live analysis room, and I'll have an interview there, and I'll get your questions as well. And what I'll do, I will also elaborate a little bit more, and also in the delving into the monthly and weekly time frame in the euro and SP500 to understand what's going on. So for now, I'll give you a very quick update on the euro. Break the all the way halfway back from 2010 highs, and we can see this on the weekly chart. It is very clear here. Let me remove some information not to confuse you. And as we could see, that thrust we had on Friday, the last Friday of the year, broke this 138.40 level. Now in the past, this break was not enough to start a move lower, to start profit taking, and I'll show you this tomorrow at Dale Pinkert's LAR. What is possible now, and it's one of the options I'm going to discuss tomorrow, is that the euro will correct all the way down into 129.70. That's a heck of a move from here, and that's very possible. It doesn't mean that this market is bearish. It is not. On the monthly, weekly and monthly, it's bullish, but that's a normal correction, profit-taking correction, and it's in line with program trading rules and footprints, as well as it is in line with psychology, market psychology, group trader market psychology. So you don't have to be worried if we get there, and I will elaborate more on this tomorrow, why we have the possibility to get there, what can happen before we get there. And as you remember, I have the 141 target, and there is still a possibility that we get there before we get a deep correction, but we will get that deep correction. So at the moment, I will provide with some levels that are very important to watch here. This market is trading in extensions on the 4-hour chart, and there are three levels we have to keep in mind. Two of these levels I'm going to provide you in the daily chart, which is what you see on the screen. And one level could be a retrace into the 137.60, although, as I'll show you on the 4-hour chart, this market already gave the opportunity to entry at the all the way halfway back, the so-called ambush trade. And but there is still a possibility that we will get there again, 137.60, and this will be a gift of this market that will allow late traders to get into this market, those who are not in already. But the possibility to get there, it's not very high probability, also because the 20-day moving average is turning lower and it's probably going to act as resistance. So and that's where the next level 137.20 area, this level of resistance will be. So if the market gets there, and with the with our Fibs talking timing technique, we see the market start reversing there, then we are going to start the move lower, and that move, as I told you, is going to bring price into that 129.60 level again, which is a very good short trade, and that should happen very quickly as well. There is the possibility that we're going to get some support at 135.93, 136 level here, and this would be a level not to buy, I think, but just a level to wait, and if you have shorts to short-term shorts, to exit shorts and wait for a retrace for this market to be traded on the short side, and this would be a 700. Would be even more, would be more than 700 pips trade into the next target. I'll explain also why tomorrow. I'll also explain why I'm not now anticipating 141 be touched now, but this market is still a long in the weekly and monthly, and I'll show you that tomorrow. Moving to the 240 minutes chart here. As I told you before, this market is already trading in extensions, and it already gave the opportunity to traders on the 240 minutes chart to trade this 138.10 retrace into this level, using the Fibonacci stalking technique. In 4 hours you would have timed this market on the 15 minute and 1 minute charts 3 times, and the last time would be the successful time. Otherwise, as a swing trader, you would have taken the 138.10 with a stop above 138.30. The reason why this market is trading in extension, as you can see here, 138.10 hit the first area, 136.89 and 136.30 area here, and of course we are getting some participation on the downside at the level that we would expect we would have this retrace. So the line in the sand here, very important on the 240 minutes chart, is 136.90, 91, 92. If we stay below these levels, then we have a continuation lower, and that's the start. That's for those who are late, that's the entry for this market. Otherwise, as I showed you before, we have 2 other levels to watch. So if we get above 136.92, we are going to watch this level. This is a very good short level if we get there, 137.60, and again there is the other level I showed you before on the daily chart, and this would be the 137.23. Both of these levels are very good short levels, and on a swing trading basis you could actually enter half of your position at 137.20 with a stop of 137.93, and if the market keeps moving higher, then you could take 137.55 with a stop again at 137.92, 93. So this would be the trading plan for you if you are willing to play this short in the euro. And very quickly I want to move to the S&P500, only the daily chart. Then I'll elaborate a little bit more in tomorrow's interview. But as you remember, we moved from this, and what you see on the screen here is the March 2014. Sorry, this is the continued contract aligned to the March 2014 expiration, and what you see, it's the daily chart, and you will remember that we went from using this anchor here to using this other anchor, which shows some which is a very aggressive market. Now when using this anchor, we saw that the day of the Fed decision and the Fed started tapering, we saw this 1763.64 level started working here, got the target, got price into the target. I was anticipating a continuation higher, 1859, but the market couldn't make it there. So at this point, the next level of support is going to be traced from the same anchor to the new high, and this is according to program trading rules, and this is going to be 1784 level. So we may well get a bounce here. This would be and if we get a bounce here, we could get a bounce in the euro dollar as well. But keep in mind that the larger trend is the weekly trend, and at the moment the line in the sand for this trend is going to be the 1734 red line here. And again, the 1756-57 level could act as a support or temporary support. If we move below 1735, I think that we can kiss goodbye this market, and we could, after, if that happens, we could still see new highs in this market, but the longer weekly and monthly participant, which are very strong and move the market, won't be interested in moving this market higher anymore. So if the euro dollar moves as anticipated, moving into 129.60, and then trusting higher again into 143 and higher, we might well see the S&P500 follow that market and maybe even print higher highs. And as we can see, the 1756 would have first target at 1888, and this is still an extension, so there is still a possibility for this market to go higher. And what I am really interested in to understand when the weekly sequence of measure move will fail, and that will be an indication for us when it's time to start positioning on the short side in this market. I hope this video is useful. I want to wish you all great happy new year 2014, and I hope you also will tune in tomorrow. I'm going to have an interview with Dale Pinkert at the fxstreet.com LAR, and so check the website. I'm going to put a link in the blog as well to the event. Thanks a lot for your attention. Appreciate you spending time watching this video. I hope this is useful as well. And if you want to, I also have a free newsletter. If you want to get the free newsletter, go to the website. I published also free ebook on market psychology, key concepts for successful trading, and you can get the ebook there. Thanks a lot for your attention, and see you all tomorrow at fxstreet.com LAR interview, and I wish you a great happy new 2014. All the best. Bye now.